Hi and welcome to a weekly outlook. This is Kim speaking on Monday the 4th of June. So I'm going to start off looking at the fundamentals coming out this week as an overall picture, see where we are. So we've already had the construction PMI from the UK out, a slight uptick there, not a major driver, but what we've got coming out tomorrow is certainly more significant sitting there, the services PMI. Much more significant figure, but before that coming up first thing, well, I say first thing tomorrow morning, is if you're getting out of your bed at 5 o'clock or 5:30, we've got the Reserve Bank of Australia's rate statement and current rate, cash rate, the interest rate decision. Is widely expected to be left alone. Any more hawkishness may see the Aussie dollar pushing up further. It's relatively strong against some of the pairs at the moment, so that could be positive, but we'll see how that comes out. But it's very significant, the statement being the most significant part of it, of course. Leading in through that, and we have member of the Bank of England committee there speaking. Let's just check what he's speaking at. It's not going to let me look on here what he's actually going to be saying, but okay, he's speaking at 11 o'clock on Tuesday. Be a bit aware of that. Aside of that, we've got Draghi speaking 2 p.m. On Tuesday as well. That can always create some volatility. And finishing off with the services PMI effectively for the US there at 3. So quite an important day tomorrow. Starting quite early for the Aussie. Okay, leading into Wednesday, not so much data there that's significant. We have got the Assistant Governor speaking for Australia, for the Australian situation at 12 o'clock. That's midnight UK time. GDP figures due out at 2:30. Again, that's expected to come out higher than last time. That could give a kicker to the Aussie, one way or the other, of course. Any downward projections won't be particularly wonderfully accepted. We've got another Bank of England speaker on Wednesday, and then looking through trade balance, Canada, building permits, not big movers. Crude oil inventories may give us a bit of a volatility with oil, of course, and of course with the Canadian dollar. The 5 p.m. speech by another Bank of England speaker there. Again, maybe you see some volatility. Leaving us through to Thursday, which again, very little apart from MPC speakers at 4 p.m. and Bank of Canada speaker at 4:15. There's little aside of that, but they could amongst themselves create enough volatility in the markets. Friday, very little in terms of, apart from the Canadian non-farms, effectively the employment change. So that's at 1:30 on Friday. So not a massive amount of data, but we're still, of course, fighting amongst the Trump campaign, etc., for a reduction in levies, etc. So we'll see what happens as we run through this week. But volatility could still be there from a fundamental perspective. Now, looking at in fact, I'm just going to bring my little chart back here again and show you the cotton analysis. I'm just going to pull this back to the euro dollar, as I'm going to cover the euro dollar first. We'll cover the cotton analysis on each one first. So let's just look at what the pension stroke asset managers are doing on the euro. They're bullish, but dropping off a little bit, as you can see by this net positions just dropping down a little bit. The fund managers, the hedge funds, getting quite bearish and continue to get bearish. I mean, they've already broken the sort of negative point. They're still quite bearish on the euro. So that's maybe a little bit late in turning if we are seeing a genuine bottom in. But perhaps they're just looking ahead and seeing it and being more aggressive on the euro at the moment than elsewhere. I should say the retail market is sitting around about 60% long at the moment, so probably suggesting completely opposite here, but the hedge funds, etc., are still, as I say, getting more pessimistic on the euro at the moment. So that's how they're seeing things. Let's have a look at the technical chart, and well, they were quite right to see things quite pessimistically up until late last week, when we saw a bottom put in and we've seen a decent bounce on the weeklies here. If we come to the dailies, Well, um, we're now starting to push up on Wednesday, Thursday, Friday. We sort of saw some of the signs looking to push up well, I say at least, but potentially to that monthly pivot eventually. I say we have got the weekly pivot sitting below us, so there's still a bit of a tug between the two, and if the monthly gets hit first and we see reversals, well, the weekly becomes a decent target to be looking for. Retracements, I mean, we can put fibs on here and start measuring all over it, and I'm sure some people will be crying out for me to do that, so I will put a little bit of fibs on, a small amount of Fibonacci analysis on here, and we just look at where we're sort of sitting there. That would be in this current wave down or wave up would be a 50% from the most recent wave situation there. Let's just have a look from the top here, somewhere in between. If that's the ultimate top, it's everyone's going to argue where the top is here. That's why I don't like it so much. But these are the obvious parts. So 50% retrace could be coming in. I'm looking more so also at that daily 21 as a potential target. So the combination up there, it will be interesting to see where we get there if we do start rolling a little bit more. As I say, the really retail side's quite neutral-ish, and being less than 60 there. But the sentiment from the bigger boys is bearish on that at the moment. So we'll see. As I say, important thing to be watching its reaction to that monthly pivot if it gets there. Cable. Let's come out first and look at the sentiment on cable from the big players. Let's have a look where we're sitting here. One thing I'd say with the euro, it's been struggling with option expiries each day. There's been quite a lot of options kicking around it, and some significant numbers again today at around about 117. We've got a key expiry at, so it's been holding it at least back to a degree. It'll be interesting to see if we get back to before 3 o'clock to that sort of 117 area from where we are at the moment, but it's certainly been holding it back. I think there might be some more bigger options coming out tomorrow, but I've not seen anything since then. So let's get on with the pound anyway. Not been plagued by options, but let's have a look at what's going on here. Let's have a look at the pension stroke fund managers becoming more negative on the pound here at the moment. The big money there, it becoming, as I say, quite bearish in that respect. The hedge funds, on the other hand, were not quite as bad, but the net positions just drifting off. I mean, they're fractionally bullish, and they're probably looking at it slightly different from a different position here, but we're still getting sort of a growth of the negative, the shorts growing here, although the longs have grown as well, but as I say, the net position is just taking a dip down. Retail wise, it's sitting there at 72% roundabouts long on the pound there, which, well, I think it's playing the bounce, which is probably no surprise, and it possibly has some legs in it yet. Did look at this last week, and it gave me a little 38% retrace and then rolled over, but it's since pushed on. Looks like it wants to push up towards that monthly pivot that's above us. If it does so, again, it's got a trend line, that's sort of near-term trend line that may just slow things down at that point if it gets there. Be interesting to watch that. Also, it's got the weekly pivot below, which I thought we might have seen a bit of action towards this morning. Now, the weekly pivots tend to get caught a bit earlier in the week, but not always, and it was right until Friday before it got hit last week, so you never know. It really doesn't matter, it's not a timed effort really, but at the moment it does look like we could be pitching up towards that monthly pivot as well, which as I say, there's good reason to be expecting a bit more of a retracement. Now, once again, you're going to expect me to put some fibs on here. I can only take it really from this most recent high. Well, I will do it the other way around, and you can see it's been somewhere between the 50 and 61.8 retracement into that pivot, so the actual 61.8 comes nicely with the 21 moving average, so some possible points there. Now, if it starts pushing through there, of course, it's well, the retail market are outdoing the professionals for a little while at least. Just looking at the big picture, we're sort of quite a way off on the big picture from that 23% That's above that 21. So there we go. If it can push up, get past that monthly pivot, well, watch out for the 21. Thereafter, it's quite an open play there, open field. There are some horizontal support and resistance points that will come into play, no doubt, and slow things up. But at the moment, looking, well, short term, looking bullish potential towards that, as I say, monthly pivot. I'd be watching for that. I'd still be looking for any potential rollover here. Dollar yen. Okay, so dollar yen is a difficult one. A dollar yen, it seems to be getting somewhere. Then we get all this risk basis, risk on, risk off, and money goes towards it. One minute it's correlated with the euro, the next minute it's not. Let's have a look at what the sentiment is like on it first then. And this is the other way around to the chart. So this is actually looking at the yen, and well, start off with the asset manager there and look at what they're doing. Asset manager really negative, not quite as negative as it was, so it's still sort of around the zero point there, but not quite so negative on the yen. Short, quite neutral if anything there, which doesn't make life a lot particularly easy. The fund manager, I said fund manager, sorry, the hedge fund managers, pretty neutral as well, although still dipping down. We've seen the longs being closed off and actually the shorts rising there, so it is just dipping down. It's crossed the zero line there this week, so it'll be interesting to see whether on the charts that would be pointing to more upside than a weakening yen. So as the dollar gets stronger. So what's it showing on the chart itself? Well, the weekly chart at the moment, we've got a hammer here sitting on the weeklies this week. Well, it started off slow, which is probably no great shock. Weekly pivot just below it, which if we are going to see this push and continuation to the upside there, well, that may give us a bit of a support. As I say, it sort of goes against the grain here with potentially looking at longs, euro pound, and the yen, dollar yen, which sounds a bit odd, but if the risk situation is softening and traders are looking for risk, they'll take out their positions, the yen-based positions, so that could create the upside. So at the moment, really just looking, well, it's pushed up at the moment into the daily 200 again, 500 again. That's giving it some resistance of late. Maybe a bounce, a bigger move down may give us down to the weekly pivot, and then look and see if it can track something off that. If it breaks this 500 in the meantime, well, again, you've still got this sort of it's pretty much horizontal resistance sitting in this 200. It's flatlined effectively, and that shows you just how stagnant the market is effectively. That might just act as some resistance again. Generally they work better on a if they're at an angle as opposed to a flat, but we'll see. It hasn't stopped the 500 stopping the market at the moment, so we'll see how that reacts, but at the moment it's got the potential for upside. Aussie dollar's seen the better news. From a weekly point of view, last week we sort of ran down into one of Charlie's lower bands there, and ended up putting into a positive candle relatively. The doji there is pushing up. Let's have a look at the sentiment on the Aussie sentiment sitting like, well, pretty negative now. Okay, so the asset managers, pension funds remain pretty negative. In fact, they're growing negativity that's sitting there, but remember, this is a delayed factor. We've seen some good data coming in today, and I think this week may change things depending on how it comes out with the Reserve Bank of Australia's data tomorrow morning. But here again, negative, maybe a little fraction kick up, but negative situation, both for the hedge funds and the asset managers. But what's it really doing though? Weekly, it's just shoving up. You can see from the size of these candles and how stagnant it's been of late at the lows here. I mean, it may be just getting a little bit of a surge through to roll over again. We'll see. Maybe just a retrace. Looking down a little bit here, it's, well, it's broken that. It's in a rising channel at the moment, and it's sort of probably broken that upper point of that channel maybe, but it's risen into the daily 500 again, flat. So we're seeing a lot of these markets are relatively flat. What we can do from here, well, I think it will be shaped up largely by the fundamentals out this week. Now, if it can pitch up, well, there's targets in terms of that 200 sitting further up. I always say this is more of a swing trading pairing than anything else. You'd have been sitting there quite tight for the last few weeks trying to get in or out, or staying in a position. You'd probably stayed in if you got in at the right sort of level, but it stalled things. I'm just looking bigger picture. Maybe if it can break that 200, which has been tested numerous times and not really closed proper above, we could get back up towards that 50. So there's the potential for that to push up the Aussie dollar. Okay, finally, Canadian dollar on the currencies here. Let's just have a look at the sentiment that's coming through here. Again, this is looking at the Canadian. It's inverted to how we normally look at the currency, because it's just looking at the Canadian dollar itself. Starting off with the pension managers, asset fund managers here. It's erring on the bullish side, although the bearish side picked up a little bit there. So the net position just dropping a little bit. It's not big positions here either, but giving us the flavour of a bit of negativity maybe coming through that, which would point to an upward moving Canadian dollar, US dollar, Canadian dollar on the charts. Now we're seeing here as well negativity, slight change here on the pitch here, slight growth of the longs, but pretty neutral really across those markets. And these markets, when you look down to the weeklies, well, it's been in this tight old range for a long time. It could well pitch back into it, and when you come down to the dailies, it makes it difficult if you're trying to swing it, day trade it, or whatever else. You may get some nice little day trades amongst it, but it's probably going to be taking money out of your pocket if you're not careful all too easily. And it's as we see time and time again, you just get into these sort of long periods on dailies, many days just sitting into range. We saw it up until the beginning, the end of the previous week, leading into last week, which then just rolled back over again into range. And we're just sort of seeing this movement now with that softening of the traders are expecting a softening of the Canadian dollar, where we could see a bit more upside, and we'll see if it just bounces off of this pivot here. And this is probably quite a pivotal area, no pun intended, but if it can pitch up from here over the next few days, well, potentially it could start that trend towards the upside. Obviously very reliant on the price of oil and negotiations with the North American treaty, negotiations which are not particularly going well, of course. And if you're looking at oil's pitching down here at the moment. In fact, I'll just come out to the weekly on this picture on oil, and it seems to have put a pivot swing in on the weeklies last week. Confirmed it's closed. It's sold off below that pivot swing, triggering it. Does look like it's a tad on the weaker side here. So that probably won't help the Canadian dollar either, and it's certainly, if you're looking on the short side and you're trading the oil price down, well, it's still got some potential. We're sitting on the daily 100, daily 100 at the moment. A break of this, weekly 21, which is below us, it gives us quite a clear point for some time. Let's just look at the dailies underneath that, and you're then really looking across the horizontal support resistance sort of points where the S1 pivot, obviously, from a monthly point of view, may just come into play. Just to be aware, the weekly pivot's still above, and always as you charts that will get caught, but the probability is slightly weaker on the oil by looks of things at the moment. Okay, that's pretty much the markets there. I will just look at the S&Ps because I so often get asked for the S&Ps. I'm going to look at the S&P itself and not the futures market, so let's just have a look, excluding anything that's happening today. So weeklies back onto the lower band there, having a bit of a bounce and pushing up. There's the 821 crossover just sort of happening as we've pushed into Friday there, and what a pig's ear, as they say. It's not really been an easy market to trade by any means, I should imagine, and well, it's still got to be, if it's this time it needs to really push and get a kicker. I mean, it had a gap on Friday open and never went back to close it. It may still want to close that gap. Monthly pivot is below, and it may just be a draw, and we may just see price constrained within these levels. So it's just to watch. If it can break above these highs, well, it will leave that gap behind, which may get filled at some point, of course. But looking above that area in terms of resistance and next sort of levels, it's difficult to see on here really. Let's just come back to that weekly and see if there's no real obvious moving averages or anything like this. I mean, we've got the monthly pivot there, the R1 above us, but then it's sort of to those sort of bodies, and maybe pushing up towards the 2790 sort of zone in that region. Okay, that's it for me. I'm going to leave you to it. Have a great week. Bye for now.